We've seen a rise in oil starting out this year. In fact, oil now above $80 the barrel. So what happens with the energy sector? Glenn Jacobson's with me, managing partner of Greenbelt Capital Partners. I'm glad you are here with us. Look, we haven't seen the 8 handle in some time. We have a lot of geopolitical news to discuss as well. What's driving oil higher, in your opinion?
Well, there's certainly renewed talk of sanctions on Russian oil. I think there's also a bit of excitement around what the economy has ahead in the new Trump administration. Lax regulation, perhaps an extension or an expansion of tax cuts. This is all leading to a lot of new activity in the United States, a lot of new energy demand, and also, on top of oil, a lot of new electricity demand, which we're seeing a lot of.
We've had, and I want to get to all of those points too. Today we've had a lot of developments when it comes to Gaza, Israel, Hamas, ceasefire, return of hostages and such. That story there, does that move oil or not so much?
It certainly has the potential to, particularly with where you might see Iran get involved. That said, I think that's been largely priced in for a long period of time, at least any degree of overarching turmoil there. And I think really what you're seeing is U.S. supply driving the picture, a lack of Russian supply driving the picture, and hopefully what we're seeing is a calming down of some tensions in that area. And certainly, personally, I'm praying for a peaceful resolution as quickly as possible.
Yes, no, of course. Anything in the right direction is so welcomed. It's too long what's been going on. That being said, here are the positives for oil as an investor in the group. Do you have certain parts of the group that you like better than others? Because we think about, exploration and production, the pipeline. You have so many different parts of this. Renewables.
Yeah, we tend to get a little bit more excited around renewables and the power grid. We're definitely seeing a good amount of growth in the energy sector in general. What we see over the next several years is a lot of general GDP growth, a nice reshoring of activity in the United States, and a lot of manufacturing activity. All of that drives energy demand. But what we're also seeing is market share being taken by electricity over liquid fuels. So we're seeing a mass electrification across the transportation value chain, the industrial value chain, and certainly what everybody's talking about is AI and data center build. So we're seeing a step change in electricity demand.
Huge. And nuclear. I mean, we never really we never even said the word nuclear until the last, year or so, right?
There's been a few deals. They've created some press. Personally, I think we might be a bit early to see a renaissance of new nuclear builds, but the Amazon deal, the Microsoft deal, those are both exciting. We'll certainly see where they go.
So, as the new administration comes in, you seemed a little positive about what could happen in 2025. Tell me more about that.
Yeah, so I do think it's a balanced picture. I think from a growth perspective and a regulation perspective, there are a lot of positives to speak to. Mm-hmm. There's a massive focus on reshoring of activity. There's a massive focus on lowering regulations, which can drive new developments. So whether you want to look at building new industrial centers, building new data centers, building new LNG export, all of those drive energy demand and have the potential to drive prices higher and activity higher. That's a positive. What we've seen over the past several years is renewables have really been the lion's share of new capacity adds on the electricity side. So over the last 2 years, 90% of new capacity additions have been solar and wind. And that compares to about 6 or 7% of natural gas. We expect to see that tighten, so a little more favor towards natural gas, but we still see a lot of renewable builds. All of that might be tempered a bit by the Trump administration is likely to take a different stance towards renewable development and tax credits than we saw the Biden administration take. That said, we don't expect a step change in that direction.
You talked about the electrification of everything, the growth, AI, data centers. These were some of the things you mentioned. When you make these investments now, you're buying into the group, right? You're buying into these stocks or ETFs.
So my firm does private investments, but certainly we're buying into the trend, one might say.
Right.
So this is not to speak to the specific relative valuations of, the bell cow in the space of NVIDIA or anybody else like that, but it is to say we believe in the growth of this sector at large, and we are investing behind that trend.
And reshoring right here at home and less regulation, you said, that will also help to expand businesses in the world of energy. Right now, when we think about being energy independent, I love that phrase. Where are we on that?
Well, the U.S. has become a net exporter of oil and gas,
Right.
which is, 10, 15 years ago, you really would not have expected to see that trend. But that is the case. Obviously, we have a very large trading partner to our north in Canada, where we do import on a gross basis a lot of oil,
Right.
although on a net basis, we can become self-sufficient. So I think really where we have some perhaps weak points that we could work to improve over the next several years is the supply chain of equipment, of raw material, and of processes and technology. And that is not necessarily as much in the oil and gas space, but it is certainly on the power side, on the solar side, and critically on the grid components and battery side, which as we build a more renewable-oriented grid, we need these critical components, and a lot of them come from overseas.
Right, so the point A to the point B, C, and D, and getting that done. Also, the strategic petroleum reserves. When I think about that, and that was not necessarily replenished, but there's also talk that we don't necessarily need to replenish it. Where do you stand on that?
I don't have as an informed point of view on the
Okay, that's
SPR
fine.
as I'd
No, you
like,
don't have to
although
talk
I
about
would
it.
say West
Yeah.
Texas is a fairly large SPR that we could
Right.
tap into for domestic purposes.
Right, understood. Is there anything really negative that keeps you up at night when it comes to the world of energy?
I think a little bit of uncertainty as to what we might see in the first 60 to 90 days of the Trump administration. One, around changes to the Inflation Reduction Act. I think we see certain aspects as being pretty safe, but other aspects like the EV tax credit, which aren't necessarily related to energy production, but they may change. On the other hand, that's the carrot, right? Incentives.
Right.
The stick side is tariffs. I think we all expect them. We certainly expect them against China. We might expect them globally. We don't know what will happen with Canada and Mexico, but we are a mass importer of a lot of the raw materials and
that are needed.
components that go into this space. That's a bit of what keeps me up at night, but I think that will sort itself out.
Okay, Glenn, good to chat with you. Glenn
Thank you
Jacobson,
so much.
Managing Partner of Greenbelt Capital Partners. Thank you, Glenn.